All right, everyone. Good afternoon. Futures Brizio here. 3:30 p.m. New York City time on Wednesday, July 16th. Hope everybody's having a great week so far. As I did mention last week around this time that I'd be heading out of town. And so I just got back last night. So again, that's why I've been absent on YouTube the last week or so. I was, watching the markets at an arm length late last week and the beginning of this week. But didn't take a whole lot of trades. But I'm back today, and so just want to make a quick video, just kind of sum up where we're at right now. So go ahead and smash that like button, subscribe to the channel, and any questions or comments, leave them down below. So we'll just jump right in, and we'll talk about corn first. This is the corn market. Market is now closed for the day. Futures markets for these grains close at like 2:20, or I think it's 2:20 or 2:30 New York City time. So they're closed now. So I am sitting on a long here in corn. And if I don't get stopped out when the overnight session comes, I probably am going to move my stop loss on this order down below this swing right here. I do think prices are going to continue up higher here. If we go to the 4-hour chart, we do have this major swing point up here. We've got a huge liquidity gap sitting before that, like right here. You can see this big wick, and just we have this huge gap right here. But I do think prices will continue up here, but I want to give this trade a little more breathing room. So if it doesn't gap down at the when the overnight session starts, I probably will move my stop loss down below this swing here on the hourly chart, give this a little breathing room, and probably trade it at least back up into this gap up here. And we'll look at the CFD charts on these in a minute to see what it looks like on the cash charts. And this is a mini corn chart, the regular corn chart, not the mini, the regular one, which I have an open trade on my funded account, looks a little bit better in terms of bullishness. So we'll take a quick look at that on TradingView when we go over there. This is soybeans, which also looks pretty bullish. I'm not in any trades here, as you can see, but we've got this zone right here. And I suppose you can argue that this one right here was a really good one too, because we did put in a new low, we pulled back, put in another low. So theoretically, you could count this as the real swing point and not this one. So let's just take this one off. And you can see on the 4-hour chart, we had a definitive close above here. So much like corn, I do think that we will turn higher here on the corn market, on the soybean market. And if we do definitively clear this high right here, I don't really think there's anything to stop the upward momentum technically until at least like this area up here. So I am bullish on soybeans. There's no trade here right now. I would need some sort of pullback here. So maybe we'll get that tomorrow. But overall, holding a bullish bias there. I am looking at crude oil again. I got away from it for a while, but just dabbling around it a little bit again. So if we go out to the 4-hour, you can see we had this big move down. Then we were stair stepping up pretty nicely here, right? Higher high, higher low, higher high, higher high, higher low, higher high. And then yesterday we broke this level right here. And so the question is now, is this a break of structure, and we're going to turn and continue maybe this downtrend that started back here? Or is this kind of just a liquidity sweep? We broke here just to pull in the breakout traders, and now we're going to shoot this thing higher. I don't know. So I think one way you can look at it is on the shorter time frame, like on this 1-hour chart. We do have this level sitting right here. This little pullback that led to this low that broke the structure. So, and of course, there's some equal highs sitting just above that. you know, like right here. But these are pretty close together. This is only a 1 hour chart. So anywhere in here. So if price comes up, as long as basically the space between these two lines holds, then I would be looking to trade this down. But if we come up and we smash through both of these levels, then we're going to go higher. So right now, since price has pulled off these lows and come back inside the range, you know, I'm not doing anything with it right now. We're in kind of that transitional zone between the bulls and the bears, so we'll see who wins out. I have this little secondary line drawn here on the hourly chart. Basically, this is the area I'm watching. If we get a nice definitive break, a nice bullish candle close back below this little wick right here on the hourly chart, that'd probably be my signal to go short. But right now, as long as it's bouncing in between these levels, I'm not really interested. I want to see it, like I said, either just smash through here and then we get some bullish momentum to the upside, or, you know, we get some, we roll over and get some strong bullish momentum pushing back, in which case, you know, I'll go short. So at least on this time frame, on this picture, no decision yet on what I'm going to do. I'm just going to sit and watch this. So, but it is potentially setting up for something, whether it's up or down, I don't know. So moving on to 10-year treasury yields. So we, after our last big rally here, and you can see the last trade I had here, and I left a lot on the table here, but this was when I was getting ready to leave last week, and I just closed the trade. We did pull back. We went up and made another new high, and now we're pulling back again. We do have the stochastic pulling back towards the 50 line. So I would like to see this dip down and at least dip below the 50 line, kind of like we did before this last big push up. But obviously the price action is more important. And, you know, so this area right here is, you know, our market structure point. So, you know, any kind of pull back and then move higher within this range would signal a new long position. And we did kind of have this false break right here. This actually was today, where it looked like it was going to start going higher again, and then it pulled back again, and, you know, continuing to move down. So I think this was a false break to the upside that you can see right here. And, you know, kind of the telltale signs is because we had what, 1, 2, 3 bull candles here, but all 3 of them have big wicks on the top. So you can see there was no follow through. The bulls tried to step in 1, 2, 3 times, and the third one was a tiny little doji candle, and there was no buying momentum to push this thing higher. And so the sellers just stepped back in and pushed this down. So I do still expect that this will go lower. But as long as we hold this area right here, I think it's still, the market overall is still bullish. But we certainly could come down lower before, you know, finally breaking higher. As long as, like I said, we hold this area here, then I still remain bullish on this market. And you can see even on the stochastic, on this little false rally right here, it did come out of the oversold zone, but it never broke through the 0 line. Or in this case, the 50 line on the stochastic. It fell short of that and then fell right back into oversold. And so I'd like to see this, you know, come back up and smash through this midline right here, in addition to seeing some nice, strong bullish candles on the hourly chart. So, but overall, I'm still, you know, bullish this market. The market's just been, you know, it's taken a break here the last couple of days, which is fine. And as long as, like I said, we hold this structure area, I'm still overall bullish on this. All right. So quick look over on Forex. Not going to spend a lot of time on this, but we'll just talk. Trump was speaking today, gave a press conference, and you never know what he's going to say in press conferences. But the question about Jerome Powell, who's the Fed chair, which he is very publicly not a fan of Jerome Powell. He thinks he should have cut interest rates in the U.S. here a long time ago. And so, you know, he was bad-mouthing him again today. And so that caused a lot of volatility in the dollar. We had these big spikes This is the euro. Actually, let's look at the pound USD. So we'll go out to a higher time frame. So here's the pound USD. You can see on the 12-hour chart, we had price come all the way back down here. And then when he first started talking, we had this candle really start to push higher. And I actually did take a long right there when I saw this. And it went into pretty good profit. And then I did close it before in a small profit. Because what happened is, you can see if we go to the 4-hour, it came up, it swept this structure area right here where I have this red line. It swept this structure area, swept all this liquidity, and then came right back into the range again. And so my entry was down here just below this little doji candle. So I closed it in a small profit. I just didn't like this. There was no follow through. It's kind of like what I was just showing you with in futures, where there's just no follow through, like on those 10-year yields. It tried to push higher and then the sellers came right back in. So, but again, this area right here where this rectangle is kind of our line in the sand. If, you know, this looks pretty bearish now. If we don't come back up now and strongly break through this wick that we formed up here, then I think this is just going to roll over and we will easily, the next time, break through this support level and keep going lower. So we'll see. Obviously, like I said, right now we're in between this major swing and this liquidity area here. I'm not interested in trading this until it really starts to show its hand. But if we come down here and we take out this low that tapped into this swing here, that's a sure sign of a bearish breakout. And if we come up here with a strong bullish close, come up and take out this high to the upside, then we probably will go higher. But as long as, again, for me anyways, that we're just kind of chugging along inside of here, I'm not really interested in anything. The 1-hour chart's not really showing me much either. I mean, it's late in the session anyway, so. But again, you can see that liquidity sweep above this high, and then price pulled right back, and it's really done nothing since then. So that's kind of the story on the US dollar anyways. This is the dollar yen. You can see, obviously, just the opposite. We had the US dollar spike lower when Trump first started talking and snapped right back. And now it's been doing nothing since then. So it's definitely driven by the dollar. The Aussie is really messy. Here's the 4-hour chart of the Aussie USD. Again, this when Trump was speaking, is look at this indecision candle. This is so ugly, right? A small candle body and then giant wicks on either side just to knock you out of whatever trade you were in. So unless you have a really far stop loss. So this is really ugly. And then there's the euro. It looks a lot like the pound USD. And then I guess kind of unrelated is the pound yen. Pound yen failed to put in a new high. We were trending up. We had these market structure levels, pulled back off of here. We had a pullback, push back up, failed to take out the new high, and now looks like it's trending down. So the pound yen, I'm basically gonna holding a more of a short bias. I don't trade this pair a lot anymore, but it's something other than a US dollar pair that I wanted to look at that still has a lot of trading volume. And if we come down and we're able to kind of clear out this congestion area right here, then I think we'll certainly work lower back towards this larger time frame swing point down here that you can see on the 12-hour and the daily chart. I do think this will become more important if we're able to break through here. So, but overall negative on the pound yen, but I'd have to see some definitive price action to kind of take out some of this noise down here on the shorter time frames. All right. So we'll just quickly jump over to the futures charts. And actually, let's look at these CFDs. I was talking about this before. Here's soybeans. This is the cash chart. This is not a futures chart. I don't trade this. It's just to get overall market direction. And you can see I have two areas marked out. Now, technically, this is the swing right here, this lower one, because price came off of here, made a new low, came up, pulled back, and then made another new low here. It's not a great new low, but it is one. So We have technically breached that now, and you see we're running into resistance at this secondary one. But again, I think this one here was the more important one. But if price is able to definitively close above, this high right here, all right, if we're able to get a close above this high, then, I think then, we will see price then go higher on soybeans. So that's what I'm basing that on. Corn, again, on the CFD charts, I do, we haven't taken out any real structure levels yet. This is the major structure level here. This is the 4-hour chart. This is our major structure level right here. And so whether we can go up here and break through here and go higher, I'm not sure. There is obviously a gap, a liquidity gap right here with this big bear candle. So I feel a little more confident on soybean longs than corn. We could see corn come up here and just, get rejected off of this gap. But, we'll see what happens. Oil, this is almost the same picture we see on futures, so I'm not going to belay this. Again, we broke, we were trending up. We broke through this structure. So the question is this a liquidity sweep that broke here and now we're going to go higher? Or is this a break of structure, a pullback, and then it'll push and go lower? So we're yet to see that for sure. And then lastly, on these on 10-year yields, again, if we zoom out, higher time frame here. Let's go to the daily. There is a pretty big resistance area sitting right here on this pullback. So I think we'll have at least one more decent push up. And if nothing else, we'll get up to here. So I am still at least short-term bullish on 10-year yields. We'll see how high they go. If we really zoom out to a weekly chart, there's definitely more topside area that we could break and go higher. So I'm still bullish on, so the bottom line is I'm still bullish on this, and I think we're just in a pullback phase right now. The futures charts and the CFDs look pretty similar right now. They're just kind of in a pullback phase. Here was that false breakout I showed you on the futures chart. Again, this is the CFD chart, and you can see, it is going lower. So I do expect that we'll see it sell down some more, but ultimately I think we'll turn and continue back higher. All right. And what else? Natural gas. Yeah, we've got this area right here, and I do think natural gas probably has some, again, more upside potential, at least to this area right here. I think is a minimum target on this CFD chart back to this major swing. And if we get through there, then the next real area is probably way up here. So again, bullish on natural gas. Oil indecisive, soybeans bullish, corn at least short-term bullish, although I don't know how long that'll sustain, and 10-year yield still bullish. All right, so that pretty much sums it up. All right, so I'm going to leave it there, guys. I got to run here in a couple minutes. I just did want to drop this video, and again, any questions or comments, leave them down below. Smash that like button, subscribe to the channel. And I will be back. Have a good rest of the day, and we'll talk to everybody soon.